Did you know that the energy sector was the best performing sector in the stock market last year? This might intrigue many investors who would like to get exposure to energy stocks and consider buying these type of companies. But it might sometimes be tricky selecting energy stock, doing a lot of research, and sometimes even after doing that, those stocks can be quite pricey. How about if there was a way that you could easily get exposure to energy sector stocks without having to pick and choose them and without having to do a lot of research? Well, lucky for you, there is an easy way, and that's through quality exchange traded funds. This is the focus of this video, where we talk about 5 high quality energy sector exchange traded funds that allows you to passively invest in energy sector and get exposure to them. And in the meantime, earn a juicy dividend. Let's get into it. We're going to be talking about 5 quality exchange traded funds in the energy sector, and 4 of them are actually in US dollar stocks, and 1 of them is available in Canadian stocks. The first ETF for us to review is the Energy Select Sector Spdr fund, available with ticker symbol 𝐿𝐋𝐈𝐿. It has $29.5 billion in assets under management and has an expense ratio of 0.12%. What that fee means is that if you invest $10,000, the fee for 1 year would be $12. As indicated, this fund is available in US dollars and it has 21 holdings underneath that. And we're going to take a look at those holdings in a moment. But before we do that, let's talk about the distribution yield for this ETF. The fund distribution yield based on the last 1 year is at 3.86%. Let us take a look at the fund performance for 𝐿𝐋𝐈𝐿 based on market value. The 1 month return is showing to be at 3.07%, and this is as of December 31st of 2021. The quarter to date was at 7.82%. The 1 year return was at 53.06%, which was remarkable for the last year for this fund. The 3-year return annualized was at 4.74%. 5-year annualized return was at negative 1.43%, and 10-year annualized return was at the very low return of 1.28%. Here, with energy sector, of course, you have a lot of that volatility. Energy sector, in fact, was the worst performing sector in the year 2020, but it turns out that in 2021, it was the best performing. And judging by the 1 year return of this fund, upwards of 53%, you could see why that was the case and how actually it turned out to be truly the case. Here, you are counting on a little bit of that dividend income, and at the same time, if you are bullish about the future of energy sector. But we're going to take a look at the funds here just to get a little bit more exposure and understanding of what 𝐿𝐋𝐈𝐿 entails. The top 5 holdings for 𝐿𝐋𝐈𝐿 include ExxonMobil, Chevron, EOG Resources, Schlumberger, and ConocoPhillips. These are the top 5 holdings. If you look at the industry for this ETF, obviously it is in energy sector, but what specific industries are we looking at? Majority of exposure is to oil and gas and consumable fuels, and the remaining 9% or so is with energy equipment and services. These are the exposure that you get through 𝐿𝐋𝐈𝐿. With that out of the way, let's take a look at the second ETF to review, and this one is by Vanguard Energy ETF, ticker symbol VDE. It is available in US dollar stocks. It has a lower expense ratio at 0.10%. Let us take a look at the risk rating for Vanguard Energy ETF. The risk rating is at 5, which is the highest level of risk for this ETF. There are 104 different stocks within this ETF. The major top 5 holdings include ExxonMobil, Chevron, ConocoPhillips, EOG Resources, and Pioneer Natural Resources. In terms of the industry exposure, here you have some exposure to integrated oil and gas, which is the highest at 40%, followed by oil and gas exploration and production, and then oil and gas refining and marketing. A lot of exposure and oil and gas storage and transportation, of course. A lot of exposure to oil and gas, as the name suggests. That's really a lot of that exposure that you get to this fund. Let's take a look at the price as well as the performance of this ETF, which we talked about. You notice the return, the 1-year return as of end of December of 2021 was at 55.99, close to 56%. 3-year annualized return was at 4.54. 5-year annualized return of negative 2.25. And lastly, 10-year annualized return of barely fraction of a point at 0.35%. But the return since inception annualized is at 5.02%. And it's worthwhile mentioning that this ETF was founded on September of 23rd, 2004. By the way, in terms of the distribution for this fund, it is paid on a quarterly basis. And if you look at the yield for that, it is showing to be at 3.40% based on the 30-day SEC yield as of the end of December 2021. With that out of the way, let's take a look at our third energy stock pick. And this one is from BlackRock, iShares Global Energy ETF. The last trading price for that was at $29.55, and it is available with ticker symbol IXC. The expense ratio here is higher at 0.43%. Let us get started with the returns first, and we're going to take a look at the market price return. The 1 year for that as of the end of December 2021 was at 40.97%, 3-year annualized return of 3.09%, 5-year annualized return of 0.29% negative, 10-year annualized return of positive 0.35%, fraction of a point, and annualized return since inception date was at 5.38% for this fund. All right, let us take a look at the top 5 holdings for IXC. Here we have companies such as ExxonMobil, Chevron, Total Energies, ConocoPhillips, and BP. Before we continue, I have a big favor to ask you. I have put a lot of time and energy to put this video together, and I appreciate if you can give this video a thumbs up and subscribe to our channel for more investing and finance related videos. Thank you. All right, our next 2 ETFs are in clean energy. And the first one is Invesco Solar ETF with ticker symbol TAN. As the name suggests, a lot of exposure is to companies that are in solar energy. The returns for this fund might actually surprise you. Let's take a look at the fund market price return. The 1-year return was at negative 25%, a little bit disappointing, but the 3-year annualized return was at 61.25%, just incredible. The 5-year annualized return was at 36.81%, and the 10-year annualized return was at 14.47%. The annualized return since inception, though, was a negative of 6.23%. Just to put things into perspective, if we had invested $10,000 into this fund 10 years ago, your money would have grown now to a dollar value close to $40,000, which is just remarkable in the span of 10 years. TAN is ranging a lot closer to its 52-week low price, which was at $67.69, whereby its 52-week high price was at $125.98. I promised to talk about 5 energy ETFs, and the last one was going to be in Canadian dollars. But I do have a bonus ETF to share with you as well. This one is in US dollars and is another clean energy ETF to share with you. It is Icln, iShares Global Clean Energy ETF, with an expense ratio of 0.42%. If you look at the return for Icln, the 1-year return at the end of December 2021 was negative 24.18%, 3 years annualized return of positive 38.32%, 5-year annualized return of positive 23.9%, 10-year annualized positive return of 12.02%, and finally, the annualized return since inception was at 4.27%. Here, you have also your semi-annual distributions, which has that yield of 0.72%. With Icln, you have a nice exposure to different type of sectors and areas. And this includes electric utilities, semiconductor equipment, renewable electricity, heavy electrical equipment, electrical components and equipment, and so on and so forth. And in terms of the top holdings, it is shown here on the screen. You notice companies such as Enphase Energy, Consolidated Edison, Vestas Wind Systems, and Ørsted. Finally, as promised, a Canadian ETF to invest in clean energy is Harvest Clean Energy ETF, the ticker symbol HCLN. For HCLN, it is available on Toronto Stock Exchange. HCLN consists of a portfolio of 40 largest clean energy issuers. Looking at the number of additional facts related to this fund, you notice that the assets under management for HCLN is at $65.8 million, and it has a management fee of 0.40%. Let us take a look at the top holdings. The highest exposure is to US companies, followed by China, Canada, New Zealand, and Germany. You get most of your exposure to renewable power generation, followed by solar equipment and services, and hydrogen and fuel cell equipment. Lastly, I wanted to show you the return for HCLN ETF. The 5-day return is showing negative 6.28%, 1 month return of negative 11.32%, 6 months return of negative 9.41%, and the 1 year return is showing to be at negative 30.65%. The fund was incepted in early January of 2021, so it's been just around 1 year time frame for this fund. It hasn't been around for that long. There you have it, folks. A quick look at several exchange traded funds that are in energy sector, including some clean energy ETFs. What did you think of this video? Are you investing in energy sector stocks or ETFs? I would love to hear from you. Be sure to let me know in the comment section down below. If you found this video beneficial, I appreciate if you can give this video a thumbs up and sharing it with someone who might benefit from the video. And don't forget to subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrencies, real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.